So why do good companies drop? And why do prices in the stock market move up and down? So check this video out as we learn more about the basics of the market. Hi guys, so let's talk about the basics of the market once again. A few weeks ago, we've talked about the basics of online trading, how you can start, how you can open an account, and that the stock market is not as complicated as what most people think it is. Now, let's try to break it down further because over the past few weeks, I've received a lot of messages asking, Marvin, if Ayala Corp is a good company, why does it go down? Jollibee is such an amazing company. SM Prime is a company that is growing and expanding. Why do the stock prices of those companies go down even though they're growing, expanding, and they're very, very profitable? People normally ask this. There's nothing wrong with this company. Why does it have to go down? Why does it go down? What causes the stock to move up and down over the short term? So let's try to break this down on a regular basis. Let's try to break what's happening in the market so you have a firmer notion of it. So here's the thing. Look at it from this perspective. Number one, prices go down because of basically supply and demand. Meaning, if you have more people buying, the stock goes up. If you have more people selling, the stock goes down as well. So let's take a look at this. The stock price of Jollibee is up today. It's at 271.60 pesos per share. It's up 59% from where it was before. So let's break it down why it went up and why it also what caused it to go up as well. Please remember this. I'll make a couple of videos also on fundamentals and why the value of the company will unleash itself. But here's what I believe in. Over the long term, it's how amazing the company is. It's the value of the company that will cause it to go higher. But over the short term, it's supply and demand that will cause it to go up. Supply and demand also that will cause it to go down. Meaning, if more people buy, the prices go up. If more people sell, the prices go down. So what do I mean by this? If you look at this illustration, you're actually seeing more people are willing to buy Jollibee at such a higher price. Looking at the quote page, one way to actually analyze it is this: if you have more buyers or at the bid volume, it actually will give you a firmer notion that hey, the stock will have a harder time to go down because there's such a large demand posting at that prices. So as you can see here, for Jollibee, you have 271.6, 271.4, 271.20, 271, and 270.80 with a bid volume, meaning these are the people who want to buy the stock of Jollibee. So that actually meant that fast forward from where it was yesterday, or if you backtrack from where it was yesterday, people bidded higher. They were willing to buy it at a higher price. Now, if you look at the other side, you have the ask price, where you have Jollibee at 271.8, 272, 272.2, 272.4, 270.8. These are the people willing to sell Jollibee. So prices move up when those who have cash are willing to cross, or when I say willing to cross, they're willing to buy above, they're willing to buy at a much higher price. So in this scenario, the reason why it went at 271.8 because there are people willing to sell it at 271.8, and those who have fresh cash are willing to buy and match those prices. So please remember this: it's okay, it's normal for stocks to move up and down. It does not mean if a stock drops, there's something wrong with the stock as well. That's okay. It's part of the game. What do I mean about this? Please remember this: investors are in the market to make money. Investors are in the market to have capital appreciation. So if some people entered early, meaning they bought a stock, say, at 10 pesos, and the stock is now at 12, 13, 14, 15 pesos, it pushes them at an early point already to, how do I say this, take profits. It pushes them at an early point also to let go of their earnings as well. So that's why prices move down, because when people who have entered early want to take profits, they sell, prices go down. So what does that mean? And people sell for a variety of reasons. Probably they just need the money. Probably they found a better stock. Probably they think that it's already too expensive for them, or at one point or another, something's actually changing in the business, but it does not mean that the company is bad altogether. Now, let's switch it a bit. Why do stocks, when it hits a certain point, it becomes people start buying it as well, and it doesn't go down at a much lower rate? Please remember this: prices go up, more people buy. So when it hits a point that it becomes so cheap, when it hits a point that it becomes too cheap to ignore, they start buying the stock as well. So that's what I mean about supply and demand. More buyers bring the prices up, more sellers bring the prices down. And if you balance it all together as well, you also have a notion that, hey, buyers want to buy at a cheap price, buyers want to sell at a high or expensive price. So if you put it all together, how does it go? The price that we've mentioned for Jollibee at 271.8 pesos per share, this actually means that a buyer who wants to buy cheap, a buyer who wants to buy at a lower price, believes that 271.8 Jollibee is actually cheap at that point in time. However, if you go to the other side of the equation, you have a person who owns the shares and wants to sell it, actually believes also that Jollibee at 271.8 is already expensive. So now, where they meet, that's where our stock price begins. That's where the stock price of the stock gets actually matched. And that will be the price of the stock for that given day, or for that given point in time. So now, what happens now is this: what if, looking at this page, you have 271.8 as the ask price, then you have a volume of 4,450, meaning these are the number of shares that are willing, that people are willing to sell at this point in time. So for example, I want to buy, say, 10,000 shares of Jollibee. The problem with that is this: there's only 4,450 shares sold at 271.80 pesos per share. So now prices go up for this reason. At 4,450, I buy everything. That still leaves me with around 5,000 plus, or 5,000 plus shares that I need to fulfill. So what does that mean? For me to be able to fulfill that order, I need to go to the next level, especially if I want to buy at the market price, or especially if I want to get those shares now. So what that means next is I'll go to the next level, which is around 1,980. So I get that, but that means I'm buying it at 270. That means also from 271.8, the stock price goes to 272 pesos per share, hence bringing the prices up. Now, you add 4,450 plus 1,980, it's still not enough to fulfill the orders that I want to get. So what happens next? I go on to the next level at 330. So as you can see, from 271.8, the price moves up to 272 to 272.20. So until I fulfill my orders, if I want to get it right now, the stock will just continue to go up. So that's what I'm saying, that more people willing to buy at a higher price, a larger demand, will normally bring prices up. Not just now, but that will be a repetitive junction in the markets in general. So please remember this: it's not wrong. It's not wrong if prices go down. It's normal. It's how markets work, because that's how supply and demand. That's how economics work. That's how more buyers bring the prices up. That's how more sellers bring the prices down. Knowing that will help you remove emotions in your trades. Knowing that will help you remove the feeling of you making a mistake just because it went down. It's normal. Please remember that the sooner you remove emotions in your trades, it will help you make wiser decisions, because emotions will make you lose money in the market. Emotions will make you have wrong decisions when you buy and trade the markets as well. So I encourage you, go beyond the numbers, look at the business as well. And that's what we're going to talk about as we go more and delve more in the basics of the stocks for the short, mid, and long term. So how you can go through that, just go to the quotes page of your broker. For this example, we're using Trade Asia as our brokerage. Enter the stock that you want. For this example, we use Jollibee, and the bid and ask price will all come out together. It will pop up. And what you need to know also is if the bid section or the bid section is stacked up with volume, it means that a lot of people are interested in that. So a lot of people are interested in that. It will have a hard time for the stock to go down, because as people sell, a lot of people will catch it and it won't go down. And on the other side, naman, two things can happen. If the ask volume is very, very thin, similar to my example a while ago, as more people want to buy it up, they buy it up, they get to buy it at a higher price, the prices moves as well. But the flip side is, if the ask volume is very, very thick also, it will be hard for the stock to actually go up as well, because there's a large difference of uh, there will be pretty much a large difference of people selling it, preventing the stock from moving up high as well. So here's a quick example of stocks with so just showing you the difference between the bid and ask prices. As you can see here, Ayala Corp, you will see that comparing the bid and ask volume, the ask volume is much thicker than the bid volume, meaning uh, this number of shares will be blocking the stock from going higher. So if I wanted to buy X number of shares, I need to beat, and not beat, but buy all of this volume for it to actually go up. So that means for it to go up, there must be an aggressive set of buyers trying to buy it, as compared to what you'll see in the bid volume. You only have 595 at 1,009 pesos per share, meaning if this gets fulfilled and more people want to sell. So for example, I want to sell 600. If I want to sell 600, there's 595 already at 1,009. For me to be able to sell, or to sell my remaining 5 shares, or sell my remaining shares, I need to go lower at 1,008. Meaning from that, when that happens, you see the stock move down from 1,009 to 1,008. Now let's look at another example. Let's look at MPI naman. MPI, on the other hand, you'll see that at 5.04 versus 5.05, you have a thicker volume, you have a thicker amount of buying for the stock. So one of the scenarios also why it becomes harder for stocks to go down, or why it becomes a firmer notion for stocks to go up when there's a large bid volume, is this. If I want to come in right now and I want to buy a stock, the problem with that is this: I would have to fall in line, and the 346,300 shares need to be traded first before I can actually transact my own. Kumbaga, I will be last in the line. But if I'm in a hurry and I really want to get the stock right now, I need to buy the stock at 5.05. So what does that mean? For people who just want to buy it quickly, the way for them to buy it quickly is to buy it at the ask price, meaning they buy it higher. And since they're not waiting anymore, it will have a hard time for the stock to go lower. And another thing, try to compare it. If you scroll down, on the fifth line, you will see at 5 pesos per share, you have 2.6 million pesos, 2.6 million worth of shares that want to be bought for MPI. That means that a lot of people see it as a level that's cheap. Remember, buyers want to buy a stock at a cheap price. So the cheaper the stock is, the more interest there will be. So as you can see here, just looking at this, there's a larger set of buyers waiting, probably wishing that the stock goes down to 5 pesos, and that's where they're actually bidding, and that's where they want to buy the stock at that point in time. So even, and also as you compare it now, it means that vis-a-vis 5 versus 5.09, more people want to buy it at 5 pesos up against 5.09, where you have a lesser amount of volume. It gives me a notion that if I compare the two, there's a bigger chance that the stock will probably go higher above 5.09 as compared to it going lower than 5 pesos per share. So that's one way for you also to analyze it. So, but it all goes back to the notion that as long as there's a large amount of buying, large amount of people wanting to buy it, stock will have a hard time to go down, and new people who want to come in will have to buy higher for them to get their stock quickly. And on the flip side, when there's more people selling here, when people want to get out, people want to sell, what's going to happen is they have to sell it lower, because there's a lot of people already trying to fulfill the orders at that particular point in time. So they sell lower, prices go down. So please remember, the bid side is thick, the stock will have a firmer notion that it won't drop, and a bigger chance that it will go up. If the sell side or the ask side is thick, there's a bigger form of selling that will prevent the stock from going higher, and there's a bigger shot that it could possibly go down as well. I hope this basic video gives you a snippet, a basic grasp of what's happening in the markets, that you will know step by step also the rudiments of trading and investing. Please remember this. We may talk a lot about making money, but please don't focus on making money. Focus on building your skill, focus on building your craft, focus on sharpening this, because the more you know, the better financial, trading, and investment decisions you will make. And that will spell the difference between profitability and loss. That will spell the difference between you making money and losing money. Build your foundation, build this, and build your experience. The more you know, the the more you practice and the more you spend the time to actually experience the market altogether, that's when I believe you can use the market to reach your goals of financial freedom. Because that's my desire. I really want to see more and more and more and more and more Filipinos trade the markets. I really want to see more and more Filipinos win and live life at their own terms. And that's what's amazing about the markets. If you've seen it in the past videos, I've been traveling. Now I'm in Baguio because what's amazing about that is online trading can make you trade the markets wherever you are without being limited by time and space, without being surrounded by a cubicle that you can do it wherever you are, that you can live your life trading and investing and doing the things that are closer to your heart, because we have only one life to live. Better do the things that you're passionate about. Better do the things that make you feel alive. For me, it's traveling and also trading the markets with confidence. So that's it for now. I hope this video helps you trade well, trade strong, trade smart. See you all again soon.